and welcome to Chapter 8, Auditing and Assurance Services. In this chapter, we are going to discuss the acquisition and expenditure cycle. So show those numbers to the auditors and I'll throw your out of the window. So this was actually Buddy Gates, which was the director of WorldCom. Of general accounting, and this was what was noted that he said to an employee asking for an explanation of a large accounting discrepancy that related to the expenditure cycle. So if you think these things cannot happen in business, trust me, they do. So here are our learning objectives for this chapter. We're going to describe the acquisition and expenditure cycle, typically looking at some source documents. We're going to identify significant accounts and the relevant management assertions that relate to the acquisition and expenditure cycle. We're going to discuss the risk of material misstatement in the acquisition and expenditure cycle. And we're going to identify important internal control activities that are present in a properly designed system to mitigate that risk of material misstatement for each relevant assertion in the acquisition and expenditure cycle. We're going to discuss test of controls to test the operating effectiveness of internal controls in the acquisition and expenditure cycle. Also, we're going to look at substantive procedures in the acquisition and expenditure cycles and relate them to the management assertions about significant account balances at the end of the period. And you're going to apply your knowledge to perform these audit procedures in the acquisition and expenditure cycle and evaluate the findings of your tests. And in the appendix, we're going to discuss the payroll cycle, including risks, source documents, and controls. So let's get started. So here is a great flow chart, and you can see, start here, of the acquisition and expenditure cycle. And then you see there is a purchase requisition, and then that turns into a purchase order. And then that purchase order goes to the vendor, and then hopefully we receive the goods and services with a bill of lading or a receiving report. And then we have the invoice here, and then we have that we record the invoice, and then we have all of the supporting documentation, and this is where we start to audit, right? We want to see the voucher, the invoice, the receiving report, the purchase order, the requisition, and the check copy. And so that is how the whole cycle is done. And so the most important part from an auditor's perspective is to ensure that you understand the process, and this would be part of our working papers. So the basic activities that we test as an auditor is the purchases of goods and services, right? So does the department request the purchase of the items through a purchase requisition? And you might have some bidding that may be involved when you have higher dollar purchases. Then you have the purchasing department that prepares the purchase order, and it's approved by the appropriate person. And it could also be done through an automatic replenishment system. So when you reach a certain level, let's say an inventory that you don't have, or you need more, then it would automatically do that for you. And then we want to receive the goods and services. And here, when they are received, we either have that receiving report. Then you want to record whether we are recording an asset or an expense. And lastly, you want to pay the invoice and ensure that your vendors are happy too. So here we're looking at each of the accounts and the assertions. So we're in the risk assessment phase here. When you're talking about accounts payable, you have these assertions that relate to it: completeness, cutoff, existence, presentation, and valuation. And similarly with expenses, we have completeness, cutoff, accuracy, and classification. And remember, keep in mind that these are management's assertions, and we as auditors are testing those. So here we have some issues, and as you can see, we have WorldCom, Waste Management, Heinz Corporation, and several others, and you see the restatement amount that related to cost and expenses. And so you could see it could be as $11 billion or as little as $16 million, but either way, it's material. And these are some of the cost and expense capers that have happened. And then we have here our internal control activities that we're talking about. And basically we have our accounts payable and our expenses, the relevant management assertion, and what could go wrong. So typically with accounts payable, we have that the liabilities are not recorded, or they're not recorded in the correct period, or they just don't present the actual obligation of the company, or they're not recorded in the proper amount or disclosed in the footnotes. Whereas with expenses, same thing, right? Not all expenses are recorded not in the correct period or with the wrong amount as well. So we have control procedures, right? And so there's information processing control. So we want to compare the purchase order with the bill of lading and with the company's purchase order as well. And we want to compare the quantities against the receiving report and the purchase order. So this is part of our substantive testing that we do as auditors. So you want to compare prices between what's on the invoice and what was quoted. You want to recompute the vendor's invoices, determine when to pay, and then properly prepare the vouchers. So these are all the procedures that hopefully we see within the organization. Obviously, separation of duties is one of the simpler internal controls that we can have in an organization. So the authorization of a purchase is usually done by the purchasing department, but then the custody of the items is usually handled by the receiving department. Transactions are recorded by accounting or accounts payable department, and then you reconcile the liabilities to the customer's statement. And then bids are usually received by some independent person outside of the purchasing decision. Then we have physical controls. So in these physical controls, what we have is we might prepare the receiving report once we get the receipt of the inventory. Then you want to count and verify those quantities upon delivery to the inventory warehouse, and obviously restrict access. Then we also have performance reviews as a type of control procedure. So you want to compare the purchasing data from previous years to what we expected for this year, and you want to review the bids to ensure that documentation exists regarding the selection of the vendor. So here we have some internal control activities within the expenditure and acquisition cycle. So here we have the account that we're talking about, accounts payable, the relevant management assertions such as completion, and what could go wrong are the liabilities are not recorded, but we added now the internal control activity. So in this case, we would have the receiving reports that should be pre-numbered and used in order, and all receiving reports are completed by the end of the period, should be accounted for in that period. For cutoff, payables are recorded in the first weeks of the period, should be compared to those receiving reports and invoices for that recording period. When we're talking about existence, we want to make sure that the voucher packages for payments to vendors should include your purchase orders and your receiving reports, and the vendor should be part of that master approved vendor list, and a three-way match should be performed where you're looking at the purchase order, the receiving report, and the invoice. Then for presentation, you want to make sure that the chart of accounts is used for classifying those purchase transactions. And for the valuation assertion, you want to make sure that the prices on the vendor invoices are agreed to that price list, and test for mathematical accuracy. Now, when we're looking at the expenses, we're still looking at completeness, but we should also use the pre-numbered vouchers, receiving reports, and purchase orders and checks in that numerical sequence. When we're looking at cutoff, compare the actual expenses with the budgeted amount. For accuracy, we're going to match the invoices or work orders for the proper cost of the items or the services performed. And for classification, we're looking to make sure that the expenses are recorded in the proper account. So now we have a test of internal controls. So in this column here is what the auditor would do. So in order to test the internal control, and remember, these are attribute testing, right? When we test internal controls, we're looking for something. So in this case, when we're looking at accounts payable for the completeness assertion, we're verifying the sequence of those pre-numbered receiving reports. We're inspecting evidence that there was some management review or that something happened with the unmatched receiving reports. When we're looking at cutoff, we're tracing those receiving reports and invoices, ensuring that it was recorded in the proper period. For the existence assertion on accounts receivable, we are vouching a sample of payments to vendors for that three-way match. And that's and that's where RPA here, robotic process automation, can help us in the audit process. Then when we're looking at presentation, we're looking to see if there's a chart of accounts and then when we're looking at the relevant assertion of valuation, we're looking to make sure that there is a price list and that mathematical accuracy was performed. And then when we're looking at the expenses, we're doing something very similar as well for completion. For completeness, we are looking at the numerical sequence. We are also examining evidence to make sure that we compare budget to actual and that any unusual amounts are addressed. And then when we're looking at accuracy, we're trying to inspect evidence between, the expenses and the invoices. And for classification, we're looking at the journal entries to ensure that they were recorded properly. And then we have several other additional tests of internal controls. So for example, we can look for the segregation of duties. We can trace receiving reports to the purchase journals. We can also scan purchase journals and purchase orders for like the numerical sequence. We can do the same thing with cash disbursements. We can examine evidence that the managers reviewed the analyses and followed up on it, and maybe look at the actual versus budget as well. And then when we're looking at accuracy, we want to make sure that we examine the contracts for authorization, possibly observe the client receiving the quantities, showing evidence of that documentation, looking at the vendor statements, and making sure that there's a recalculation of the price. Look for approval for that payment, look for managerial review of the journal entries, and maybe review the reconciling items. So as you can see from an auditor's perspective, we are keeping busy and trying to check the internal controls and then perform additional tests of internal controls. So we're looking, again, more at inspection of evidence and making sure that the accounts are recorded correctly in the account classification. That's the name of the game. So then we have direction of the tests. So you can go either way, as you can see from the direction of the arrows. So you can go from the vendor invoices to the purchase journals or from the vendor invoices to the receiving report, but that is our three-way match, right? So that's basically what we're trying to do when we're testing, substantively testing for expenditures. Then we move from the risk assessment to the audit evidence. So and this would be our work papers, right? Our audit work papers. So we're going to be searching for unrecorded liabilities. So we're going to ask, hey, how does the client identify and record liabilities? We're going to scan the open purchase order file. We are going to examine any unmatched vendor statements or invoices and any unmatched receiving reports. We're going to confirm the accounts payables with suppliers, and we're going to review the cash disbursements that happen at the end of the year to provide this audit evidence that we need to perform our substantive procedures. Then we're going to look at purchase cutoffs. And when we're looking at cutoffs, we're examining the receiving reports and the invoices that happened around year end to make sure that they were recorded in the proper period. And then we're going to look at several other accounts within this cycle. So we might look at prepaid expenses. We're going to look at accrued liabilities, maybe other expenses such as repair and maintenance, legal. We're going to check out inventory and property, plant, and equipment as well. And here's an example of an account analysis for prepaid expenses. So you see we do have the actual link here to the work papers, and you notice that we have our tick marks right here. And then you see F is for footed, so we're footing everything, and you see how every number has some type of tick mark. So I should be able to pick up this work paper and know exactly who prepared it, who reviewed it, and the work that was performed, as you can see. So every number should have a tick mark on it that shows what you've done and here where you're cross-footing it to another work paper. And then you see that we're looking at the audited balance, the additions, the disposals, and what we've done, that we've calculated it and where we've traced that to another work paper, X10, X11, or X12. And then you can look at the two to see all of the substantive procedures that were performed. So for accrued liabilities, we may have a major difference between those accrued liabilities and accounts payable. So we might have some issues with property taxes, wages, income taxes, and these types of payables aren't normally invoiced, or they really do not have a receipt of goods. So this can make it a little bit more difficult for us as auditors to detect the unrecorded accruals. So when we're auditing the accrued liabilities and the prepaid expenses accounts, we're pretty much agreeing the balances to prior year work papers, which we saw in that schedule, verifying payments, examining the agreements, recalculating amounts, and agreeing the expenses to the trial balance, looking for those unrecorded accruals by reviewing the cash disbursements at the end of the year, and looking for any expected accruals at other stages in the audit if we're looking for bonds or for notes, and perform our analytical procedures to make sure that everything looks good. Then for income taxes payable, taxes can be a doozy, right? They can be a complex area. And usually companies work within multiple tax jurisdictions. So you would probably we would probably get our tax specialist in our office to help us with that. But we would vouch the payments, and we would look and examine at everything and make sure that we're adhering to all of the auditing estimates. Then when we're auditing PP&E, right, property, plant, and equipment, we're looking at a general approach, right? We're looking for maybe small numbers of transactions, some high dollar amounts, or that the authorizations of those transactions was actually given. And we're not as concerned for the access to the assets, but we're mostly concerned that we don't have any unrecorded disposals. And then what we're going to do with PP&E is we're going to take those balances and agree to them to the prior year documentation. We're going to look at those purchases, vouch them to the invoices, inspect the title, and make sure that we vouch those to the board minutes. Then for the expenditures subsequent to acquisition, we're going to vouch those to the invoices and the work descriptions and make sure that they are properly classified as either an expense or capitalized if it qualifies. And then when we're looking at the disposal of property, plant, and equipment, we're vouching right to the minutes of the board. We're vouching the cash receipts journal and the validated deposit slip, recalculating the gain or loss, make sure that we trace that to the board minutes for completeness. And then when we're looking for unrecorded disposals, we're going to agree the balance to prior year work papers, look at the insurance policies and the property tax records, and inspect or confirm the fixed assets, whether they were existing and newly acquired. And then we're going to look at depreciation expense, making sure that we recalculate it with the useful life, the salvage value, the cost, and pretty much evaluate it based on the reasonableness of those estimates, and is depreciation consistent with the company policy. Then we're going to take a look at the lease agreements, make sure that they're treated properly, and ensure that the disclosures are in the footnotes. And here we have, again, a property, plant, and equipment and depreciation schedule. And as you can see at the top, we have our work paper, and then we have each of the buildings, and you see the tick marks as well, that we agreed it to the prior documents. And as with the prepaid expenses, you see most of the numbers here have some type of tick mark. So again, I should be able to pick up this work paper and know exactly what the auditors performed and how they did their work. And then when we're looking at auditing cost and expense accounts, we're looking at the analytical procedures relating the expense to the balance sheet account and making sure that we do perform those substantive tests of transactions and vouch to the details. And one of my favorite topics is fraud. And so when you have to, and we all know that in auditing, we have to look and audit for fraud. So if we review for fraud risk, if it tells us that there could be a potential significant risk that fraud is occurring within the acquisition and expenditure cycle, then we have to do several types of searches. And we would do those with CATs, computer-assisted auditing tools. So in this case, what we can do, and this is again where data mining software such as IDEA or Alteryx can really help us, and robotic process automation can help us, where we can inspect invoices for photocopies, looking at the vendor invoices that were submitted in numerical order, making sure that vendor invoices that are always in round numbers to kind of help us see if there's any fraud. We can scan those invoices to see if there was a lower than a review threshold. We can also look to make sure there's no PO boxes, or that the invoices do have phone numbers and that those addresses and phone numbers match what we have in the vendor master file. We could also vouch a sample of vendor invoices to the approved vendor list. And so this is all types of procedures that we can do to try to find fraud in accounts payable. And here we have the PCAOB inspections and what they're telling us, right? That the PCAOB is required to perform detailed inspections of the audit process employed by each firm's auditing publicly traded corporations, and a formal inspection report is issued by the PCAOB for each firm. And in a recent inspection report, the PCAOB highlighted the importance of testing clients accounting for income taxes. And here you see that. And so this was the report on the 2019 inspection of Grant Thornton by the PCAOB. And then here we have for property, plant, and equipment, based on the same report, that the PCAOB is required to do this, and then the firm selected for testing a control that included the issuer's review of possible impairment indicators for property, plant, and equipment at one of the issuer's subsidiary, and the firm did not evaluate, one, whether the control was appropriately designed to identify the impairment indicators that were present, and two, the review procedures that the control owner performed, including the procedures to identify items for follow-up and the procedures to determine whether those items were appropriately resolved. Additionally, the PCAOB noted that in performing its substantive procedures related to the issuer's assessment of the possible impairment of this property, plant, and equipment, the firm did not evaluate the issuer's determination that there were no indicators of potential impairment beyond inquiry of management. And here you see the auditing standards that relate to that. So the PCAOB in their inspections basically is pretty much saying what Grant Thornton in this case failed to perform. And then the last piece is the payroll cycle. And so often we process this by service organization, so our SOC report, and then we have the balance sheet accounts are usually pretty small, so what auditors typically do is rely on the test of controls and the substantive testing of transactions. And there are some risks associated with the payroll cycle, especially with fraud, so ghost employees, where you're paying people that don't exist, or overpaying or padding the time, have some classification errors with incorrect accounting, or you forget to pay third parties such as your payroll taxes or your insurance. So those are the types of inherent risks, and we know inherent risk is part of our overall audit risk model. And here we have the typical activities within a payroll cycle, where we start, with compensation. We have to make sure that we record keep. We make sure that we have our timekeeping records, our government and payroll taxes, our payroll register, make sure we're recording it properly, and that we're giving out the payroll checks accordingly. So when we're talking about the payroll cycle, we are talking about personnel authorization forms, right? To authorize all payroll related transactions, and employees should record their hours using timesheets, and then supervisory personnel will hopefully review those timesheets and verify the distribution of the hours worked. Now the payroll department will process payroll, and then they'll do the payroll register and the checks. Then we have the cash disbursement or the treasurer that will review that payroll register and compare it to the payroll checks. And the payroll checks are signed by an authorized party and then given to the employees. And here we have several control activities, where physical controls, segregation of duties, and performance reviews. So we want to physically control the payroll checks and the signature plates. We want to make sure that the checks are distributed by a person that isn't involved in the process or recording of payroll. We also want to make sure that the payroll checks distributed to individuals with providing proper identification, and any unclaimed payroll checks are stored in a secure location. Obviously, with segregation of duties, we want the personnel department and the hiring and employee department to authorize those payroll transactions. Payroll is recorded by the payroll department and general accounting, and then the cash disbursements department or treasurer keeps custody of those payroll checks. With performance reviews, we're looking at payroll transaction data, and we're looking at it comparing prior year or to budgeted and expected. We're also reviewing the payroll register for reasonableness and making sure that the payroll bank account is reconciled as well. And then we have actual management reports and files within the payroll cycle, right? So we have personnel files. We want to make sure the payroll register is kept. If there's labor cost analysis, any clearing accounts are reconciled, making sure that we adhere to the government and tax reports and year-to-date earnings records and W-2s. And that concludes our lecture on the acquisition and expenditure cycle. Thanks for watching.